what we're doing is by doing a little bit of each chapter, because most of it, especially this first stuff, is easy. However, income tax is not easy. So I'm pretty sure this right here is the most difficult on the test that's coming up soon. I don't know, but that's coming soon. All right, probably next week. Okay, so it's also on the final, and there's no real. I mean, there's a formula sheet, but there's nothing here to help you with on the formula sheet. I don't think. I'll have to go look. I'm pretty sure there's nothing on the formula sheet that's going to help you. Okay, so you have a job, you're making some money. Okay, at the end of the year, there's this thing called gross income. How much money that you actually made the whole year. I don't know why they call it gross, because it's beautiful. It's amazing. Actually,
it could be
gross. Gross that just means everything that you made over the course of the year. Okay, and so here's the actual total income for the year. That's your definition of it. Now, you would like to pay taxes on the least amount of income possible. That is the goal, unless you just want to give federal government money. I've never met anyone who said, you know what, I wish I could pay more on taxes. Never. Okay, now, I've heard politicians say, I wish people would pay more on taxes so that we can do more. But anyway,
why don't they pay more?
They have good accountants who get them out of paying. All right, so what we're going to do is we're going to try to reduce our gross income, and we're going to call it our adjusted gross income. So we're going to, the government allows you to subtract some things from your income. Okay, and these are called adjustments. So there's the little formula which makes sense. Okay, everything that you made minus anything that you can adjust out of it. Okay, so you're entitled to some exemptions and deductions. They're not, okay, and these are subtracted, and you want this to be as small as you can. So the first thing is a okay, so an exemption. Okay, first exemptions. All right, your parents probably make you their exemption. They probably claim you as their exemption, which means you can't even claim yourself sometimes if you're young as an exemption. So my daughter claimed her all the way through college. Once she was out of college, then I no longer claimed her, and she claimed herself. But she didn't make a whole lot of money, so it was no big deal. You guys probably aren't making a whole lot of money at this point in your lives. Hopefully your parents make more than you do. So it'd make more sense that your parents would claim you as an exemption. Some kids, their parents do not, because they make enough money, and their parents there's so many different possibilities. Okay, so if you're a family of 4, you would have 4 exemptions. A mom, dad, 2 kids. Family of 4. Okay? If you, I don't know, there's all kinds of things that you could do. That you could claim people. You can't claim your dog. You can't claim your neighbor. You can't claim, everybody gets to be claimed one time. All right, so you can't claim people who don't live with you. Can't claim your fish. All right.
Like
so
if your grandparents live with you,
so that you can, however, but then they can't claim themselves.
Well, like if
So
old.
right, they might not be earning, but
Yeah.
okay. So for them, any type of Social Security is called income. So if they make, so not that that's enough, but that might be enough that they would have to pay some taxes on their Social Security income. It's really weird, just weird. The government wants their
They
money.
give you money, but then
They want some back.
pay
Yes.
Right back.
Yes.
Because
Okay.
your Social Security comes from the government.
Right. Right.
And then they just take it
Yeah.
back.
Well, it's actually from our taxes that. Yeah. We're taking care of the people that are retired, and eventually, hopefully, somebody will come around. Your generation will take care of my generation.
Yeah, good luck with that. Good luck.
Yeah. Okay. Now that's not how it's supposed to be. It's supposed to be. It started as like making people put money away so that when they retired, that money, but that money is gone. That like
nice.
out of your check, there's a little thing called Social Security that is taken out, and everybody thinks, oh, that's in a savings account. It's not. It's gone. They've spent it. Okay. The government spends more money than they bring in.
Don't people set up like
Yes.
where it comes out?
Yes,
like,
and we're going to do
actually?
that. Yes, and we're going to do that, but not today. That is in chapter 8, and it's the most important part of this lesson of this course. All right, this is nice. Lesson, course, both chapter 8. All right, so exemptions. Then there's the thing called standard deductions. Okay, and you can take, the government says you can take X amount of money right off your income, and you don't have to pay taxes on that, just for being a person. Yay, yay. This is different than being an exemption. So, however, there's also itemized deductions. And if you're itemized, after you itemize all your stuff, if it's bigger than the standard, then you would take itemize. It's really weird, okay? So, here is the key to it, even at your young age. And they are not paying me to say this, but TurboTax or some program like that will do all this for you. So you are free to do your own taxes and just follow the instructions. I've done it a few times in my life. After that, after when TurboTax came out, I said there's absolutely pay the $50 for TurboTax or whatever it costs, and do your taxes.
I'm pretty sure my parents pay some money.
Yeah.
My parents will.
If you have a business or there's taxes that are so complicated you have to hire accountants to do it, that's fine. I think TurboTax, if you're just you're just making a little bit of money as a teenager, it's actually free. So, because there's nothing really complicated. Okay, so we're going to take our adjusted gross income, and then we're going to subtract any exemptions and deductions we have. So here's our very first example. A single woman with no children earned $87,200. Pretty good little salary right there for a single lady. Okay? She has a savings account, and she got $2,680 from a savings account. That's a pretty big amount from savings. Okay? She contributed $3,200 to a tax-deferred savings plan. She has a personal exemption of $4,050. Okay, and then here's she could take a standard deduction of $6,300, or these are some of the itemized things that you could do. Your interest on your home mortgage, okay? Property taxes on your home. State taxes, we don't have any state taxes in Texas, however, they still let us take some off. And then any money that you give to a charity. Those are all those are all part of deductions. And if these add up to more than $6,300, then you take the sum of these. And for hers, it definitely is, right? So here we go, her taxable income. What do you think? Look here, ready? Taxable income, adjusted gross minus that. So we're not even there yet. So we got to figure that out. Her adjusted gross, we started at $87,200. But then she also got plus $2,680. So her gross income I know how to spell, is equal to 0.8898. Remember, you'll have a calculator, so you don't have to do any weird math. Okay, that's so far that, okay, and we need to adjust it down because she contributed $3,200 to a tax deferred. Tax deferred means I'm not paying taxes on it now, I'll pay taxes later. So we're going to subtract $3,200. So she has $86,680. The good news about this is there's not a whole lot of homework questions. The bad news is there's a lot of steps to all the homework questions. All right. So her taxable income, just that right there. This is the AGI, adjusted gross income. So we're going to go AGI minus her exemption was $4,050 plus any deductions. Well, all her deductions, she's going to itemize, so she's going to add those together. So I'm going to add those together right here and put them over. See how much it is. If I know how to turn my calculator on. So 11,700 plus 4,300 plus 5,220 plus 15,000. All right, so her itemized adds up to 36,220. Her standard is 6,300. I think she's going to take her itemized, right?
Yeah.
I think that's a little bit higher than that. Okay, so we're going to put that 36,220. Now, hopefully you're good enough with math to realize all it is adjusted minus the exemption minus the deductions, right? You distribute that negative sign. Hopefully you're good with that. So we got 86,680 minus 4,050 plus 36,220. And I got $46,410. So here's a lady who makes $87,000 in income, $2,000 in interest income, and she's going to pay taxes like she only made $46,000. That's pretty good. That's really a lot lower than what she made. And that's what you want. You want this number right here. Here's the number. This is the number that you're going to pay taxes on. You want that number to be as low as possible, unless you really want to pay taxes. All right, ready? We are not done. Income taxes are so fun. So fun. So here's the next thing. So there's a tax table, and you have to go through the tax table to find out how much you need to pay. Now here's the deal. Ready? Trump changed the tax table. Okay? He also changed the standard deduction. And the exemptions change every year. The exemptions move a little bit, about extra $50 almost every year higher. So this is actually an old tax table. This is 2016. Now,
Did you change it in a good way or a bad way?
it depends if you like Trump or not.
Financial-
I like,
What does
financial
the,
standpoint.
what does
does it-
the tax table?
from a financial standpoint, people paid less taxes.
so
Almost,
So then a good-
almost everyone paid less taxes.
So then it was a
Good
good
thing.
way.
Yeah. However, some people, a few people, a few people paid more taxes, and they were very mad. But they were wealthy people in New York.
Okay, well, if you're super
Okay.
wealthy, then you should pay more
New York
taxes.
and California mostly. And so they were mad. And I can tell you, it doesn't matter what a politician does, half the country's going to be mad. So, he changed the standard deduction to way high. I used to always be able to itemize because I give to a charity, I have a home that has interest, I pay property taxes, and all those things added up was always not even close to standard deduction. So he upped the standard deduction. So I basically, all those things are no longer, it doesn't even matter. So, people were mad about that. Because
Probably because they did all these things.
they were giving to charities to give
Just
tax.
to-
But if anybody gives to a charity
it should be.
for a tax write-off, they're giving for the wrong reason.
Yeah.
And basically, there's better ways. If you really want to reduce your amount of taxes, there's better ways to do it than that. And
That's like whenever we do the fundraisers and stuff, like the sponsorships, the coaches are like, they can use it as a tax write-off.
right now, businesses it's different. I'm assuming. I don't own a business. All right, so here we go. Ready? Now this is confusing. This is still recording. Yes. All right. So this part is confusing because you do not pay the same percentage on all of your money. Okay? So you're either single, you have to choose one of the four things. You are either single, married, filing separately, married, filing jointly or together, or you're a head of household.
What's the difference between married and out of household?
All right, unmarried and paying more than half the cost of a child or parent. So these are like a lot of the weird situations or unique situations. Grandma moved in, whatever.
Yeah.
Child support, all that kind of stuff that's very, very confusing. I don't understand it. So accountants do. TurboTax does.
Because you're married and don't have
Yeah, I know.
to do all that.
Yeah.
Yeah.
Dang it. College cost my daughter more because we're married and she stinks.
Dang, I might tell my parents just to get,
Yes, tell your parents
to get a divorce.
Yes, your junior year, get a divorce, and then one parent doesn't work, and then claims you, and that way.
That doesn't make any sense.
I know, but then when you go to college, it looks like you're from a very, very poor family. I've seen families do that, and but dad's
That's fraud.
not. It's yeah.
That
They actually
Everybody does
did.
it.
They did get divorced. They were okay, but dad was wealthy, mom was not. And so the kid claimed mom, of course, and then when she goes to college, hey, my mom doesn't make very much, $20,000-$30,000 a year. Dad's making $100,000. I'm not going to tell him about that, Dad. So you get more financial aid, but it's loans are loans and stuff.
You get a lot of financial aid being a single mom.
Yes, our little liberal hearts care about you. I don't know, whatever. We care about every kid. All right. However, so
Take care of that.
here we go. Ready? She's single. The lady we just did. So the first $9,000 that she made, $9,275, she has to pay 10% of that. Then any money higher than that, up to 37, she's going to pay 15%. And then the last part, she has to pay 25% of her money. Okay, she's not going to pay 25% of her income as taxes at all. She's only going to pay 25% on any amount higher than $37,651. It's really weird to calculate this.
You subtract the
Yes.
46,000 from the 37,000.
Yes. So we got, what was her number that we started with?
46,410.
46,410. All right, here we go. 46,410. And you kind of have to know this number. Okay. So, if you will subtract, don't subtract the entry number, subtract the exit number. Does that make sense?
Yeah.
Okay. So, subtract the second number. Okay. So if I subtract this, 37,650. She's going to pay 25% of her taxes on that. Oh man, alive. So 25% of that. So my wife and I, we would be considered in this bracket as well. Okay.
Why don't you use the one up above it instead of this one?
It's just the way it works. Okay. Because it just works that way.
Why you use the 15% number instead of...
All right, so now 15%. So we're going to go anything between 37,650 and 92,75. That part, she's going to spend 15%. I'm going to give 15% to the government. Okay? And the the initial $9,275, she's gonna pay 10% of that.
How are you getting the difference?
Okay, I'm getting them right here. Times that. So the first $9,275, she has to pay 10%. The difference between this number and this number, she has to pay 15%. The difference between her adjusted taxable income and that number, she's going to pay 25%. So think for just a second. She makes one more dollar. The government gets 25 cents of it. I hate that. I'm not a big, huge fan of this is called a progressive tax. And look at this last one, 39.6%. If you make more than $415,000, now most people think if you're making $415,000, you're pretty much set for life anyway, right?
Pretty good money.
Okay, you're doing good. I can tell you that people who make a lot of money
Yeah, but they're
usually
taking-
spend a lot of money too.
They're taking over a third of.
Yes, the government's taking over a third of everything that they make. It makes them mad.
I mean, that kind of does suck if you're working hard for that money.
Mm-hmm.
Third of it's just
Yeah.
fine.
If you're in this group right here, more than likely you've started businesses. You know, you're not working for somebody at this point.
Yeah.
Unless you're not even, like if you're a super duper lawyer, they might be hitting that number. Okay, but a super duper lawyer probably is not working for somebody. A doctor, I don't think the doctor makes that much. So but even a doctor might make in this range right here between 190 and 413. A good surgeon, 1/3 of his income goes to this last part of his income.
When he's selling.
Yeah. So somebody says, oh well, how much does the surgeon get paid? He gets paid $5,000 for this surgery. Well, it's actually a third of 2/3 of that because the government's gonna get a third. So it's really now people who live in this area, and I hope it's everybody, but it's not.
Right,
Okay.
but that's their taxable income, so
Uh-huh.
they're probably making double that, right?
Yes, they probably have. Yeah, exactly. They have really good accountants, and they have paid really good accountants to get their numbers as low as possible. So, like, Amazon didn't pay any taxes one year because they had good accountants, and what they did is Amazon expanded, so all their money went into expansion. So they looked like they made no money. Amazon. It's a $10 billion company
They spent
because they
all
spent.
of their money before.
Now they made and they made it look like that year they spent everything all their profits, probably more than their profits. So because they probably took loans out and stuff, and they expanded because Amazon's buying.
And then months later,
vans.
they made it all back.
Yeah, they're
plus
making.
some.
Yes, it's
Made it back.
super complicated. It's not one accountant can't figure it out. It's whatever. A floor of accountants works for Amazon to figure this thing out. Anyway, we're doing simple taxes. However, they're not that simple. And if we do use our calculator, it's we got turned on. 40. We're only gonna get through this, I think, today. 410. Nope. 410 minus 37,650, and that's equal to that. So we're going to pay 25% of that. So that's equal to $2,190. I can know what this one is. This is $927.50. And then I need to figure out this one. 37,650 minus 9275 times 0.15 is equal to $4,256.25. I add all those together. And it comes up with 73.75.
Why did we have those together?
Because that's what she has to do.
She has to pay $7,300 of income tax. Now remember what she made.
Wait, so she's paying more than 25%.
No. She paid.
No,
She
but-
made $87,000.
Right.
plus her income, her interest. So she made almost $90,000, and she's paying $7,000. That's about 8%.
But
And people are okay with this. Go ahead. What is your question?
why did we do the 25, 15, and 10? And
Because the first $9,000, she paid 10% tax. Her next grouping up to
so you have
$37,000, she
to
has to
pay
pay
on each one of
each
those?
group, and then the last part of her taxes, her income, she has to pay 25%.
So
So
it's
like,
not just like you say you're in the 39.6.
Yeah, you're gonna do
you
a
have to
lot
pay
adding. Yes,
in each one of
yes,
those.
yeah.
No wonder they're mad.
But okay, over on the big scheme of things, though, she made almost $90,000 and only had $7,000. So that's about 8% tax.
That's less than
That's pretty good.
the tax.
So
on
let's
the
say,
house.
this is what makes poor people mad. Okay, you're a kid and you make $9,000, which is possible. $9,000. Your parents claim you. You have absolutely no deductions, nothing. Okay, so you're going to pay $900. I think there's you can do the standard deduction. I think you're okay still. So even if you make, let's say you make $15,000. Okay, then your standard deduction, you take that out. So you're back to $9,000. You're going to pay $900. So everybody's paying about 10% if they have a good accountant, if they're actively part of society. Okay, you ready? This will be on each test. No, not. I don't know how we're going to do this exactly.
So then, if the rich people are only paying 10%, why are they so mad?
Because every dollar they make, the government gets 25%. Every extra dollar, the government makes 25%, and they get mad. That makes them mad.
There's poor people.
Or if they're real rich, 33%.
There's poor people over here paying $1,000 when
Yeah.
they make
Yeah, I know.
15.
Yep. There's a lot of people pay zero. Lots and lots of people pay zero. So that frustrates me. One of my favorite people was a politician named Herman Cain. I think so. And he had this, ready? He called it the 999 plan. Everybody pays 9% taxes. Everybody. No exemptions, no nothing. Just pay 9% taxes. Every company, 9% state tax, 9% business tax. Everybody's paying 9%. It would never fly because there's too much politics involved. But it was like, I like that. Now our tax rate in Texas is like 8.25%. So that would go. But it would work itself out. And that way we're all in this together. I like that idea that we're all in this together. And you make some money, guess what? 9% is going to the federal government. Whatever. You're going to buy something, 9% is going to go to the state government. So right now Texas is at like 6% going to the state. So yeah, taxes would go up for a little bit, but I think it would offset, pretty quickly as well. And the rich people would be very happy and mad because their deductions would be gone. And so, I don't know. Anyway, here we go. Ready? Last example. What time we get out of here? 50?
10 minutes.
All right, it might take 10 minutes. It takes forever to do these problems. It's not even fun. We cheat. Okay, so ready? All right, we're going to use the tax rates from 2016, even though we know that they are not accurate today. All right, so we're looking at a single man this time, no dependents. Here we go. Gross income, $40,000. Adjustments. So 40,000 minus 1,000. We have no idea what that adjustment is. Absolutely no idea. So his adjusted gross income is $39,000. Did you know Now, if you make $15 an hour, working 40 hours a week, you'll make about $31,500. Okay? A lot to a 18-year-old, 17-year-old. I don't know how old you all are. 16, 17. Okay? It's not a whole lot of money if you're trying to have a family. Okay? Kids are expensive. So, that's like, man, that's awesome. I could live forever this way as a 20-year-old. And you can live a long time off this amount of money. However,
Well, just stay single, live alone.
exactly.
Live with your parents.
There you go. Live in your basement, parents' basement.
Well, yeah, if you lived with your parents, they'll still claim you.
And so who exactly? Dang it. They can only claim you for so long.
Really?
Yes.
They can't claim you for
I think it's 25 is the end.
Your car insurance is
Super high.
high
It's $150.
until like
150 a month?
my cousin pays like $400 in Florida.
So I won't tell you how much mine is for 2 cars and an RV. It's less than that.
75.
just to let you know
My
that.
cousin pays almost $400.
Yeah, I've heard people that their car payment and their insurance are about the same amount.
Oh.
Males are worse than females.
Oh,
All right.
because-
But once you hit 25, it goes down.
All right, ready? Here we go. So here's our deductions. $3,000 to charity, lost $1,500 in a theft loss,
Oh,
and $300 for that. So we add those together, and what do we get?
we get
I got $4,800. Is that more than the standard deduction?
No.
Standard deduction is what?
I have no idea.
63.
That's what-
Standard deduction is $6,300.
63.
So we're okay, right? We are going to do standard. All right, so here we go. AGI. So, taxable income is equal to 39,000 minus, don't forget the exemption. The exemption is 4,050 plus the standard, which was 6,300.
So everyone gets that exemption?
That's unless you're claimed by a kid, yes. I mean, by a parent or a kid, I guess. So that's the exemption, and this is the standard deduction.
So what happens when my parents do they get
They get
that?
the 4,000 off of their taxable income, which means you don't get the $4,000 off your taxable income,
Or if I'm not paying taxes?
and you're okay. This is also why people like to pay their employees cash. Like if you're doing, if someone's coming to my house to work, I'm gonna pay them cash, and then the government doesn't know anything about it.
Yeah, my mom-
Actually, if someone pays, if I work for somebody and they pay me cash, I am supposed to report that. Not that they're doing anything illegal. I'm supposed to report that income. That I made $1,000 doing manual labor for this person, and I have to pay taxes on that.
Yeah, no.
But of course, people don't. But
I work at Sonic, and I always get this one person. He goes in, he hands me like $5 bill, or not. Comes in, he comes
Yeah.
after. He did $5 bills. Put this in your pocket.
yeah,
Don't tell him about it.
yeah,
He's like,
yeah,
don't tax it.
yeah.
I know how it works.
Yeah.
Just put it in your pocket.
Put in your work. Yeah.
my mom-
Which technically is against the law.
Yeah.
But at the same time, it's like, whatever. It's $5. Who cares?
It's fine.
Okay.
Leave me alone.
Yeah, I know. I'm torn between the two
my mom
things.
just puts money in my bank account.
There you go. There you go. That's this way.
Just transfer
All right. So
it.
how much money does he? How much income is taxable? So 39,000 minus 4050 plus 6,300. So he's going to pay taxes on $28,650. We're almost done. So how much taxes is he going to pay?
He is gonna pay.
All right. So where's 28? 28 is in the second row. Correct.
10 and 15.
So we have to do two things. So we're going to start with 28,650 minus, go up one row and get the 9275 and multiply that times 15%. And then that first 92.75, he has to multiply that by 10%.
So the 10% are what we're gonna
Yep. Everybody gets to pay that. The first $9,275 you have of taxable income, which it does not mean income, taxable income.
What if you don't make more?
do. This is up
Yeah, up to. So
So no matter
$10.
what you mean.
yes, yes. Now, if you don't make enough, you don't like if it's
What is
there's
it?
some limit like $600. If you don't make more than $600, the government doesn't really care.
You can do all sorts.
No, but people.
Sure you can.
But you guys are live with parents, so it doesn't matter. So $2,906.25. I add those together. Now, I can tell you that you probably should start on this homework because it is frustrating. Because if you use the wrong table, the wrong row, the wrong column, you're gonna get the wrong answer. And there's a lot of steps to the final product. We got 3 minutes. I'm gonna do this. Ready? Divide this amount by his gross income.
Why?
I'm gonna show you something. He paid 9.6% tax. Okay? 9.6% tax off the 40. Basically,
His didn't go down very much.
his didn't. You're correct.
I just don't
But if the deal is, Trump has changed that, and it would have gone down farther. So this guy would be happy with the tax changes. Now look at this lady. Ready? How much was her taxes?
Okay.
This lady.
Oh, 46.
I lost a piece of paper. Where is she?
46,410.
No, that's her taxable income.
Oh, how much?
Okay, she paid 7,000.
Yeah.
73, 73, 75, and divided by her gross income, which was, what was it, 89.90? 89, something like that. 89, we figured it out somewhere. 89,880.
Wait, so this dude makes $40,000
Mm-hmm.
and
Paid 9% tax. This lady made
so he
87,000. Ready? Ready? Her taxes, ready for this? 8.2% tax.
So we could just meet in the middle and do 9 like you said.
This is why people get mad, but at the same time,
Who made more money?
well, this lady made double. The lady
She
made
made
double what
double.
the man did,
She paid
and
less.
she didn't pay less taxes, but she percentage-wise, she paid a lower percentage.
It,
But she also gave $15,000 to charity. She also owns a house.
that's more than
And is she single too though?
Yep, that should meet.
But her standard deduction was
Her deductions
we
what got it.
used standard deduction on him and
Because
his
he didn't
was-
he doesn't have a home.
No.
He doesn't live in a state that has income tax. Our state doesn't have income tax. He didn't give any money to charity.
Our state doesn't have an income tax, but you said we still.
Okay, so there was a little law that went through that we still
Our state
get
doesn't have
they estimate how much taxes we do, and we get that off our taxes.
Huh?
It's weird, really very weird. Very weird. All right, so there it is, income
How about
taxes.
None of us pay taxes.